My name is Priyank Tiwari. I'm Associate Director for Sankalp Forum at Intellicap, based in Mumbai. I also have my colleague here from investment banking Intellicap, Stanbic. He heads investment banking practice at Intellicap. He's again based in Mumbai. But we look at projects and operations across different countries through our different services within Intellicap as well. So thank you so much for coming. The session, I'll actually not do too much talking on the session. We want to keep it a lot more interactive, which means little less monologue for me and more talking and discussions at the forum. I'd also like to welcome Ben from CFC Stanbic along with his team. And thank you again for supporting this session, Ben. We appreciate your support. The session is really on SME Banking 2.0. The idea is to talk about what CFC Stanbic is doing in this space, understand what your programs are with particular regard to the SME sector, and are there any areas or is there any scope for us to collaborate, for you to collaborate with CFC Stanbic on some of their initiatives, and really help create a stronger SME banking ecosystem in Kenya and East Africa. So we'll start the session with a very brief introduction from Ben about CFC Stanbic and the program. Then we can probably do a quick round of introductions along with some of the programs that each of you are running, which are focused on SME Banking 2.0. And then we can have a more open, interactive discussion after that. Again, the idea is to keep it very informal, very interactive, and very free-flowing. What we're going to achieve from this are very specific outcomes in terms of collaborations, areas we can work together and partner. So we should be able to walk out of this room with hopefully some good collaborations as well. So with that, I would like to formally welcome Ben Wanda, who's Head of Business Banking at CFC Stanbic. Ben, over to you. The floor is all yours.
Thank you very much, and thank you all for making it here. I think to sort of position why we are here, I want to share the challenge that we face. You may be aware we're part of the Standard Bank Group, the biggest bank in Africa by assets. So from that perspective, we play a significant player in investment banking, in corporate banking, and we've made a deliberate effort to put a lot of investment in business banking. How we describe business banking, we look at customers whose nature of business is not complex to the extent that we have to bring in a specialist to sit in a room with them. So if business complexity is such that we have to fly in a specialist from London or South Africa, then they'll sit in investment banking, corporate and investment banking. Or if they are banked by corporate and investment banking in South Africa, then in all the other countries we operate, they sit in corporate and investment banking. So we have some customers in business banking that are big enough and could be described as corporate, but because of the nature of the business and their footprint in Africa, they don't sit with corporate and investment banking. Now, if you look at business banking itself, we then have got segments. So we've got the top end of business banking, which is commercial banking, and then we've got more or less 2/3 of the pyramid, which is the SME banking space. Across that, we've got products houses, so we've got vehicle and asset finance, trade finance, and then we also have agriculture as a segment that transcends across commercial banking and SME banking. Now, the nature of this market, I think we face all sorts of pressures from a local currency funding perspective as well as a foreign currency funding perspective. Sophia is our treasurer. Her responsibility is to source funding for us, and I think she's had a very interesting 18 months to actually just find affordable liquidity. Now, when that happens, you find that we're landing funds that we could easily lend to corporate and investment banking and the top part of business banking, but not necessarily the bottom of the pyramid where the critical mass is. And also, if you look at our relevance to the market and how we want to change lives, that's where we should actually be playing. Now, if I take an example of one customer that we have in the dairy industry, so we have financed the milk processing equipment, distribution trucks, milk collection points and refrigeration points and all that. But the people that supply the milk to them are part of cooperatives, so they've got over 15,000 farmers. So we supported them when they had a field day. One of the most interesting functions I've been to, because they produce milk. So even for lunch or dinner, whatever it is, your starter is a cup of tea that they make. Very nice milk. And then the conversations that I had with some of the farmers was that we thank you, you are supporting the entity that we sell milk. But what about us? And if you look at the funding that we get, we have two challenges to actually go into that ecosystem. So from where you're sitting, we are financing this entity, we are financing the vehicles that they use for distribution and collection of milk and products. And when we look at the entire ecosystem, we want to make sure that our touch points go beyond the parent entity. And so maybe from a digital perspective, we've come up with solutions that help us collect payments as they deliver the milk, but also use the same to pay the so many farmers that provide the milk. The challenge then is if we have to go the next level to cover the entire ecosystem and touch the lives of the farmers that are providing the milk, you'll find that on one hand, they may not have adequate security, or they have assets that we may not necessarily take as collateral. On the other, you'll find that when we then get the funding and load in the cost of operations, cost of credit, we factor in credit loss ratios and all that, it ends up being too expensive for us to either lend directly or to lend to middle player to on lend. So such is the challenge that we face. We think we have a big responsibility to touch more lives. In Kenya, we feel the SME market requires our support. But the challenge that we face is that we really don't have access to liquidity that could help us extend facilities to them. So when we had conversations with a group from Sankalp and the conversations were around that because from experience, I was once still working for Standard Bank, but we had a development credit authority that was supported by USAID. And I figured maybe this could be the opportunity to also just engage the invited guests to find out if there are any initiatives they have in mind that could help us either source cheaper funding and then we can pass on the benefits to the bottom part of the pyramid, or if there are other guarantee programs that we can use to de-risk some of the players that we can actually lend money to. So in a nutshell, that's really the problem that we're grappling with. And I thought we could maybe share ideas and see how best we can tackle it. It's fine, you can go first.
I'm smiling. I thought we were to do the introduction.
That's brilliant.
So I think it's good if we can do the introductions first. And then,
It is.
yeah.
Yeah, we're proceeding. So it's natural to start from a corner.
Oh, we can start with you.
Exactly.
We can start with you. So,
Okay, my name is Mercy Mutua. I work for a private equity fund called DOB Equity. We are headquartered in the Netherlands, but we have two regional offices, one in Nairobi and one in Tanzania. We're a team of 4 here in Kenya, 1 in Tanzania, and 3 in the Netherlands. We're pretty much sector agnostic when it comes to banking. So agribusiness is one of our soft spots. But we do direct lending, which we'll come to in a bit. And our mandate really is to invest growth capital in growing companies in the East African region. So we're always on the lookout for partnerships, for opportunities to invest. Yeah, and I think one of our main focus areas this year is to co-invest or collab with similar-minded investors. And if CS is willing to do that, we're open to discussions. And any other investors who can see Alpha here. Yeah, it's a pleasure to be here this afternoon.
My name is Stanbic. I work with Stanbic Bank. I take care of marketing for retail business.
My name is Elizabeth Nyambo. I work for CFC Stanbic Bank and I'm in charge of social organization.
My name is Dennis Connect. I'm with USAID. I'm newly arrived here in Nairobi. I've been here for about 5-6 weeks, but I plan on staying for a few years.
My name is Gagan Bakshi, and I head the investment banking practice for Intellicap in India.
I'm Saskia Van Ras, also with DOB Equity, so a colleague of Mercy. maybe just to elaborate slightly, we so invest, as Mercy said, growth capital, primarily equity in 2 to 4 million US in companies that have revenues of at least $1 million, that have proven their business model, have a great management team, know how to execute, have proven as a market, and we would like to partner with them to really maximize the value of their companies. And as Mercy said, we can then also provide debt to them, but in principle, we're an equity investor.
My name is Andrea Chakapa from Alpha Africa Asset Managers. We're a fund manager, so we invest in fixed income, but we also do a bit of advisory on the, should I say, private equity side, because we're still building our track record there. So we're always looking for partners that we can go to structure interesting solutions, and we ourselves also co-invest when we get investors.
I think my introduction is already done. I'm Priyank Tiwari from Sankalp Forum at Intelica.
Hi, my name is Priscilla Chimele. I'm with UNDP in the Regional Service Center for Africa in Addis Ababa. What we're trying to do is to coordinate stakeholders, because we know that there's a lot of really good work that is going on, a lot of really good interventions that are taking place in different parts of Africa, but it's not really coordinated. When you go on the market, you're not really sure who's doing what where. So what we have done is to develop an action plan to begin to address some of the main challenges that we're seeing in this sector. What I'm interested in here today is to see if we can get some stakeholders that would be interested in contributing to the achievement of some of these action plan items.
I'm Sophia Hassan, CFC Stanbic on the treasury side.
I'm Mary Mwangi. I'm actually, don't know where I wasn't supposed to be here, but I just came in because I saw it said SME Banking. We actually develop payment systems for small merchants, and what we do is try and collect data so they can be for banking purposes and for them to run their businesses. So basically, we automate payment systems for small merchants on the point of sale side, and also on the back end side. We provide a system so they can keep their books, and if they wanted to track their sales and have a way that they can actually go for credit. What we've been working with is small businesses, and also some manufacturing who want to track the sales right from the point where a customer comes into the chain, like this whole supply chain management part of it. Mm-hmm. And we develop our systems here in Nairobi, and so we also do, our point of sale is customized, so it can do anything, it's very versatile. So it's just geared towards what the merchant wants. Rather than going to the banks, we actually go to the merchant and then bring them to the banks and to the mobile operators so that they are connected and they can receive their payments.
Hi, Patrick Omune. I work for Hila National Strategies. We manage PR communication for safety.
Right, thank you and welcome again, everybody. Maybe we can just pick the thread from what Ben just spoke about, and let's have it a lot more interactive. But perhaps we can start by talking about some of the gaps that you see in the SME lending space, and how are you addressing those gaps through some of your programs. That will be interesting to hear, and then we can talk about maybe synergies after that. So anybody, can you like to volunteer?
I can start, but I don't know much of the Kenyan market. I am aware that there are gaps, particularly when it comes to SME financing. We have in the past designed programs to meet that need coming from Mali, and we put together a very interesting financing package with two different banks, local banks, Malian banks. And it's true that a risk mitigating partial guarantee system is important to banks, at least there in Mali, and please fill me in terms of here in Kenya. But more important than that is, at least in Mali, is they see a lot of good, interesting economic activity going on with the donors in the field. And Mali is basically an agriculture-based economy, so we were basically working with the SMEs and farmer producer organizations there. And the banks told us in the very beginning, look, the partial guarantee risk mitigation program is fine, but we've got a lot of those already. What is more important to us is the gap that exists. We've got these people that have been operating for years and years and years sometimes, so they know what they're kind of doing, but they need help in terms of financial management. They need somebody to accompany them, to get them up to speed to become bankable in terms of record keeping. Okay, they don't need to come up with a audited balance sheet for the last 10 years or whatever, but something that can be reported that proves what they've been doing in the past, okay, and the mere fact that they've been doing it for 10 or 15 years proves that they're doing business somehow, and then come up with an investment plan to bring them up to the next higher level in terms of an investment, whether it's a medium-term loan or equity debt package, and then come up with an investment plan and help implement it with them. All right. Once you have this technical assistance on the side, continuing with your technical assistance on the production side and the market linkages side, then we would be interested. So we put together a two-pronged program that included a risk mitigation program, but also this technical assistance, because this is something that the banks on their own cannot do. They don't have the resources. Okay? And I come from the banking field before joining the government, so I'm relatively new to the government. And once a bank invests in accepting a client as a client, that's when they start kicking in their resources and accompanying that client. Okay? And you don't start necessarily with giving a customer money. That starts the relationship with the bank starts long before that. Okay? But once a bank has decided that you're my portfolio, it's amazing the resources that the bank can do in terms of helping that beneficiary along. Because banking services are a lot more than just credit. Does that help? At least. So I don't know what the situation exactly is here in Kenya, but at least I throw that out in terms of my experience in Mali.
Can I add something? We had a dairy company approach us, and they said that they wanted us to use a point of sale system for them so that they can go and collect milk when they do their rounds. So they would collect milk. They want to keep that data of how much each farmer is bringing for the milk, and then they give them like NFC cards, and then with those NFC cards, that is how they get paid, depending on what their delivery is. So by giving them that, they're able to track how much money each person is earning. They're able to look at their system and saying, you're capable of, depositing this much. They can also, from that card, determine, because then it's in that same bank, they would also determine their spending habits and how much money they have extra. So in a way, it's bringing them to the banking sector that they weren't before. So the missing link mostly we find is that most of these people at that level do not have a way of having verifiable data. So by just having verifiable data, then that helps, even when banks come in to say, yeah, you can get these kinds of services because you can pay back, or your income is at this level, so we can bring these services to you. And basically that is part of what, when we started out, we said, we're gonna give them a way to collect data. So we are collecting even the cash and everything. So you're able to track really the expenses and the payments, the revenue that the people are earning. That is part of the way you can bring that to the banking sector. And also I think just offering cards that they can use in different places, or just a way of tracking how much revenue do they receive, how much of it do they spend at the end of the month, how much does their card have, or when do they spend most of it. Kind of help.
Maybe to respond to that, we used to give to the merchants. And the idea is, banks will tell you that you need to understand the transactional piece, which is what you're talking about. And also understand what you collect and your spending habits and what have you, so that we can begin to build a history around you. The development work we've done, we want to then take it to the next stage. The first stage now is it gives the merchant a till. So they do collections from M-Pesa through the till, but it collects data. So whoever is buying it will collect the number, whatever they bought and all that. So they also begin to do the database of the customers. But from where we're sitting, because we're offering same-day settlement, it terminates into a bank account. And whether they move the money out to restock and what have you, but they're building that track record. The next bit of it is to add a credit decisioning tool that looks at the transactions that they're putting through the pipe. And then they can actually go onto the portal, make a request to borrow some money. We say yes, having run some algorithm in the background, and then disperse through the till. So they also get it as e-value. The entity we're working with has done a lot of work, so you really can't cheat the portal by convincing other people to pay through the till, because it will be an outlier. So they've got a lot of history in the background. So if someone sells drinks, they've got tills in that sector, so they understand the movement. So it sort of normalizes the data, and then if you, for example, you ask or you make a request for 100,000, it will look at everything and say, because the collections are as you trade and as you settle continuously. So it will say, no, looking at your transactions, we can't give you 100,000, but we can give you 75. But that's the next level. But those tend to be maybe the more sort of sophisticated customers. And then for those, we can purely do cash flow-based lending because we see what's going on. The flip side would then be the kind of customers or the kind of people that are actually producing the milk now. And with that, so you understand what they're doing, but they say they want more money to buy the next head of cow, that kind of thing.
Yeah, I can understand that being the issue in terms of that, but the till and the information you'll be getting will be from the supplier himself, your main manufacturing guy, the guy who's collecting the milk from you.
Yeah.
So he's the one who has this data of how much money is being paid into the farmer person. So that's where you're getting your information in terms of how much money did this person get. But since it's also paying them through a card, the money is going to a card, they have to go somewhere and cash out that money. Or maybe through M-Pesa, whatever system they're paying, but it's an electronic money. So with that, you're able to see where they're spending it. I think that's...
I'll probably give you an example that, we helped a company in India, which was in nutraceuticals, right? And that entire product, the raw material is based on the crop that is, basically it's a one-season crop. So you're working a lot with the farmers to make sure that that crop is ready and you pick up that crop from them. The problem that the company was facing was in terms of working capital, because you need to not only have working capital for your product and inventory, but also working capital to give to the farmers so that they can really get the crop ready, and it takes almost 9 months. So what happened, they were having a lot of cash crunch because of that and not able to grow. But also the farmers were feeling a lot of pain in this entire process. So some of the banks actually came up with an idea where they would directly lend the farmer, but the entire guarantee, corporate guarantee, would be given by the company which was procuring the entire crop. So it's really solved the problem at that time, and then a few of the banks have actually started doing that even in the dairy industry. So directly supplying to the, or giving the loan to the farmers and getting a corporate guarantee from the company that is procuring the milk on a day-to-day basis. And it really worked well for both the parties. So that's something that is happening in India right now. It's a tripartite kind of an agreement, and it works well. The other side of it is that we also have the partial guarantee and the DA facility scheme that is being run in India by a lot of banks or the national development kind of banks. And that's also been helpful because some of the banks are not willing to go down the value chain and take the risk. And with this partial guarantee, it helps them take that risk. So that's also worked very well for them. So there are a couple of programs that are being run parallelly in India to solve this problem. I'm sure that same thing is possible here as well. So we just need to probably brainstorm and see if something like this, probably from USA or even from UNDP, can help in terms of structuring a package that can really go down to the entire ecosystem.
So I think it'll be interesting to see other forms of funding as well. So when you look at equity or you look at grants that are coming from the likes of USAID, how can the different forms of capital actually help address these gaps? And is there a way where these different parties can actually work together and create something which actually is able to provide funding to the SMEs? So do you see any of those examples here where equity or grants can actually play a role in scaling the business?
Definitely, I think one example that we have and challenge that we also had to resort to providing our own debt, and we'd rather have raised it at a bank, is with an agro processor, a trading company, who buy from smallholder farmers and process and then sell. So we invested equity to increase the capacity of the company. And then we had a working capital challenge. So the company had challenges going out in the market, raising the working capital, even though there was equity there. And obviously, to grow the business, they need working capital because that's the business they're in, the trading. So I think the difficulties there was the early stage of the company. So a lot of not yet profitable. So not a lot of appetite from banks, even though this was in a country that there weren't a lot of, they were competitive in this arena. It's a very attractive potential client for these banks to have. So that was one area that we then said, okay, to get this going, to be able to get to a certain revenue that would be large enough and attractive for a bank, will provide working capital and set that off. And then on the other end, there was a challenge in getting these smaller loans, smallholders to produce more, to increase their yields. They were being given training also to increase yields, better inputs, all very simple steps that can be taken with relatively little investment, but yet an investment for these farmers to make that could really have a significant impact on the loans and be able to pay back. So for that, we finally worked together with another bank, but it then again is so expensive, the farmer and the processors now getting these loans repaid and then ready for the next harvest so that they can then increase their acreage is also challenging. So I keep thinking, how can I find a grant funder in that side to maybe provide a guarantee towards the bank to then spur more investments into these small farms to increase their yields. And then also on the working capital side, we're also still looking for partners to get that ball rolling, because the opportunity is massive, except there's this capital challenge that is holding it back.
And also, do we see cooperatives raising loans from banks?
Yes, but some of the banks here come from sort of a cooperative background. So the cooperatives will actually just go to those banks. And then some of the cooperatives themselves raise funds from the members that they then on lenders.
Right.
So you have that whole sort of ecosystem going.
Can I ask what the range of interest rates are for working capital loans here for small SMEs and possibly farmer organizations and farmers? What's the range?
So it's not likely that we'll do any foreign currency lending in the United States. In shillings, you get a low of 19% to a high of 26%.
So the range is 19 to 26%.
Yes.
And that's commercial banks. That's not MFIs.
Yes, that's commercial.
And what are MFIs charging?
If they have to lend them to the banks to fund them, I think you get a level of about 13, depending on where it is in the interest rate field. We have seen some with funding of about 13%.
So commercial banks lending to MFIs at 13%, which unlends to their customers.
At much higher rates.
At what price is the MFI lending to the individuals?
If the MFI
it would be around the same.
is steeper if an MFI comes to me to on lend than if the eventual customer comes to me. Yeah. So it's
Thank you.
So what would you need to see to lower rates? What would motivate you to lower
where do you keep your money? When I keep your money, then I can.
But seriously, you're not going to get deposits from everyone. But yeah, what would it take for the ecosystem to support you to be able to lower your rates?
Maybe I should leave that for the treasurer.
Well, here's the question. What is the cost of funding for banks here?
The cost of funding for banks here would typically be very close to where your higher end TBA rates are in the development curve. So depending on where those rates are, so I'd say cost of funding is typically around your 12%, 13%.
Okay, so if the cost of funding the banks is over 12%, they're lending at 19, they're only adding a margin of 7%, which is not that outrageous.
How can we lower that cost of funding? That's what I'm asking. What
Okay,
indicators?
let's
How
ask the
do we
treasurer.
support
How does
to
one in Kenya,
the risk of that 12%?
why is the cost of funding so high, basically, is the question.
Yeah, the cost of funding in Kenya is typically high for the banks. Number one, your depositors expect quite a healthy.
So what do you pay on
interest rate.
savings deposits?
Sorry?
What do you pay on savings deposits?
On savings deposits. On savings deposits, I pay 7%.
But, so you have the other smaller banks that I was just telling him I lost a deposit because one of the smaller banks is offering 14%. I can't because if I do, I wouldn't be able to own lend. They are able to because the customer who comes in is probably one who doesn't have collateral. They can turn around the decision in 24 hours. So this person believes he can walk in and out with money and you pay anything for it. So those are the kind of conversations there that spin into 6% per month or 1% per day. And one of the entities that pitched yesterday, they actually charge 1% per day. So
your credit cost is close to 5%, right? If your deposits are at 7%, the gap of 5% is purely on the credit cost.
And operational, yeah, you have your credit and operational.
I mean, banks have to pay salaries and everything else, so it's not just the credit, it's, the whole kit and caboodle. So I'm wondering, is there a way to lower the cost of funding for the whole banking system? Because it's not a problem of one bank.
Yeah.
If the cost of funding is 6-7% to begin with, banks are profit organizations. Money is nothing more than a commodity. Like any other commodity, there's a price. And the price to money is the interest rate. And the interest rate is a function of the cost of funding.
Yes, it
And
is.
operations and credit.
And
So,
profits.
and
Then here's a profit element, which I would like to discuss.
yeah,
What's the
but
spread?
if you analyze bank profits,
Kenyan
in terms of
bank
cost-
profits in particular?
some are probably outrageous, okay.
I think there's room there. Yeah. But they're not also willing to see that. I think that's the problem. There's a room to navigate around the profit margin. But my take is the banks are not willing to see it in advance.
maybe you can share some insights on how you do it, how you guys do it.
Our funding is totally different from the banking funding because ours is purely equity. So ours is really patient capital, it's long-term capital.
And what is your expected return on your then?
It really varies from company to company, industry to industry, different variation because of tenor, the risks we take.
Average.
So it really varies. It does
Okay,
vary.
say agree.
And even our motivations are very different. We're very much an impact investors, so not really primarily driven by just the returns. So it's a combination of so many things. So it's really difficult to compare like to like. But what I'm saying, I think there's room for the banks to see the bit of the profits they make, especially in this part of the world. I think there's a bit of a space to play and interact with other players in the ecosystem where they can get the guarantees to sort of de-risk the investment, and in that sense then lower the cost. Because as long as your money is expensive, nobody's going to borrow it. I mean, that's just a fact. And if they do, then increase the risk of default rates. So we just need to create a more conducive environment. And it's a win and take. It's just not asking for the ecosystem to support it, but what we are willing to see. So it becomes a win-win situation for everyone.
But I think there's something we haven't discussed in Kenya in terms of the macros last year went upside down, didn't they? There was a time that government paper was actually going for 22%. And I say that because we run a fixed income fund. And then you find investors, if they can get government paper for 22%, that's why the stock market even tanked further. So people withdrew their money because if they can get it at 22%, it pushes everything up. So the question we're asking here is not necessarily an individual problem. It's what you said, it's systematic. It's at this almost central bank level. What's also worse for developing economies is, and you can't help it, the stronger the US dollar gets, the more attractive it is as an investment destination. If Kenya wants to still attract investors, it will also have to keep its rates up. So I think at the end, it's a matter of creating structure. So I'll give an example where I saw there was intervention. The IFC has made a decision that they want to support women get more debt capital. Because of that, they gave 25 million to one of the banks in that. How they priced that, because they saw that sector, they didn't want the sector to already be fully crowded out, and then depending on the two financiers, you can pass that saving on to the particular consumer. So there are some funds that, and what I see with entrepreneurs is that they want a little bit of, should I say, quasi-equity, a bit of debt, a bit of equity, because the private equity is still something very new in the region. So as much as you talk to entrepreneurs that like, I'm giving you away, who's this person? I don't know you. So you almost have to graduate the scale. So we have to find a way to make those structures speak to each other. And I do agree that there is a role for like a USA to play, but it's more customized. It's like having more discussions like this to say, what is the market saying? What does the market need? And the sectors are completely different. As you said, what may work for agri would not work for retail or might not work for a different segment. So it's okay to even work bank by bank. And we've seen people intervening.
And maybe even deal by deal. That's
or deal by deal. But all people want to know is, when I have a debt solution, how innovative is your credit team? And sometimes when we meet investors, we're trying to talk on the banking side, we're like, we need to do this. And some people have, they have great deals, but it's not the traditional cash flows. You're going to have them out. How quickly are we able to adjust our criteria on either side to make sure that that deal happens?
The points she's brought up are quite interesting. When people talk about banks in this part of the world, what you really do need to understand is that we go through years where we come from interest rates of 2% to interest rates of 25%. So there is that aspect of it. And as well, hedging instruments, you don't have that many in the market. So what happens is, because a bank has to take that kind of risk and can't hedge it appropriately, they're going to have to transfer that to their end consumer, the fact that they can't hedge that. So that's another factor to think about. But I think what really brings us around the table is to sort of see what are the solutions that we can offer. Are they the guarantees? Are they specific, getting specific cash for specific sectors, and then partnering on one side to hold the hands of the entrepreneurs going through all the bits that they need, and on the other side, us being able to then on lend to those people. So it's trying to see what we can do, because we need the different bits to come together for us to be able to then participate wholly. But the fact that we go through such volatile cycles as well doesn't really help.
Are there examples of companies you've helped with innovative structures? Are there things you've tried out with maybe?
In some of the operations we have in Africa, we've had some structures with IFC. So we had a program in Malawi where we use IFC support to lend to distributors of airtime. We had a development credit authority from USAID for Greek and such customers. So there have been times when we've used such to sort of de-risk some customers and to go into areas which would not ordinarily have gone into.
And on a company, would you be open, say, if you would have an SME come to you and say, listen, I have these organizations around the table that see my impact or that see room for growth or the potential of the company, and they would like to do something, can we work together with you to come up with a solution that will now take you more time though, because it's new and everything for your team?
Definitely.
So on a deal-by-deal basis?
Yeah, we would do it on a deal-by-deal basis. It's one of those where if we do it ourselves, our credit colleagues will think we're trying to pick up stuff. If we work with an entity like yours, they just need to understand how you've arrived at what
event. I think we are glad, we are winning, more than winning.
Okay.
But what's your colleague? I'm sorry, I didn't get your name.
Sophia.
Sophia. What she says is very true. The shilling is a currency, okay, but it's a relatively very small currency in terms of world currencies. So there are not a sufficient enough liquid market to create some of the derivatives that, say, developed countries have, the euro, the dollar, whatever. For example, foreign currency derivatives. Do you have any foreign currency swaps between the shilling and, say, the euro or the dollar?
We do have them, but the tenor is also they're quite vanilla, and their tenor is also maybe up to about a year.
Because
So it
the
doesn't
market
help
is
in
very
the long
shallow.
term.
Because the market. So that's another challenge that we have to keep in mind, is that when you're dealing with a shilling currency, by definition you're at a disadvantage and it's going to cost more to do anything.
I think that's why institutions like yourself can offer other instruments to soften that. That's why for me, what I'm trying to say, it's not impossible to do it. Yes, it's a shallow currency, blah, blah, blah. But that doesn't mean that's the end of the game. There
This
are
is true.
solutions that have
This
come
is true,
created
and this is
around
probably
this.
one reason why organizations like yours, the ALD, should be sitting down with the private sector,
Yes.
like a bank like Stanbic, which is the largest bank in Africa by assets, from what I understand, to see if there is not a way to structure,
Right,
okay, through a derivative.
yeah.
I mean, you have a steady flow of US dollar demands going out of Kenya, okay, so you got the dollar flow going this way, but you also have a huge amount of remittances from the diaspora in dollars coming in. So is there not a way to structure the outgoing with the ingoing to come up with a foreign currency swap structured kind of transaction to lower the cost of the future swaps? Because I understand the insurance for a swap for 1 year is about, what, 19%? That's what I heard the other day, which is awfully expensive.
Yeah.
But if there's a way that we could structure something, all right, you've got flows going both directions, okay? Isn't there a way, you know, somebody from Goldman Sachs to come up with their great brains with Stanbic to make a derivative and capture some of these inflowing and match them with the outgoing? Because that's what an FX swap is all about, is it not?
Actually, at a point.
Yeah, I do. I'm just listening to like the views around the table. It's very interesting to me because, by definition, SMEs, they are small. They are not making profit. Many of them do not have capacity. They are just starting out. So they are a pretty risky group to invest into. Now, when we look at banking and how it's structured, with the aim of making profit, when we're talking about 19 to 21% interest rates, I'm not really sure if the current model that you use in banking for charging interest rates and for lending would work for SME lending. Maybe it's time to like look at alternative innovative models. And this is why we're talking about impact investment. That when you're going into the field, when you're investing with a specific aim of reaping social and environmental impacts in addition to your financial impact. So you're not only looking at your financial bottom line, but you're also looking at what kind of social impact you have and what kind of environmental impact you have. And that means that sometimes you have to compromise on the profit aspect of it. So you're not necessarily making a loss, you're not fully subsidizing the companies that are starting out, the SMEs, but you understand that the model that they have and the growth stage at which they are is different from a big corporate that would be able to afford that kind of capital. So I wonder then if it might be necessary to look within the bank and see if a lot of companies use their corporate social responsibility units and look at just giving or maybe building schools or giving a little bit of the profit that they make to societies, but changing that and actually changing it into an impact investment unit or team and actually investing with the aim that you still get your financial return, but instead of giving back a little bit at the end of the year when you get your bottom line, actually making sure that you're capacitating the SMEs to be able to also contribute to the societies within which they live.
Well, and to grow to be a future commercial client.
Yeah.
That's an important point actually, because we've got CSR regulations just forming up in India. and a lot of debate around how you can use that CSR money for even SMEs and all those unbanked areas and unbanked population. But I think the other concern around that is the CSR money is usually supposed to flow into not-for-profit organizations. So how do you really move that money from there to profit-making organizations is a concern even at the government level as well. And I'm sure that's probably one of the challenges when we are facing in India, because there's so much of CSR money that has to necessarily flow into a not-for-profit organization.
Yeah. No, for sure. I mean, I completely understand and I agree. But for me, the point of suggesting that maybe the CSR units changes, because I don't believe in a free lunch, you know, and banks, most of them, or all of them, all of you guys are about making some kind of profit. You want to see a return on the money that you send out, that you put out. So instead of some banks have quite a big budget. So combining the money that you're talking about now for SME banking and some of the money that you're looking at for CSR, and putting that together and actually investing in SMEs that bring about some kind of social change to enable them to grow, and then maybe at some point they can come together and form cooperatives. And then you can lend them at this higher rates when they're bigger. But SMEs, by definition, when they're still small, many of them will not be able to afford the kind of capital you're talking about.
May I comment on this? What's lacking from our banking sector is innovation. It cannot be business as usual. The climate environment is changing, and you guys have to change it. And I'm not getting that sense you're wasting or coming up and doing innovation yourselves. So I think that's something we really need to look at as a bank. Whatever innovative instruments you can come up with. And then you have the ecosystem around that will be able to support you. Also, I think a lot of initiative also has to come from yourselves. For instance, take the water sector. I think water is such a big issue in this company. But what happened is USA came together with KW and with KREP Bank, Housing Finance, and I think it was KCB, where they created this innovative structure where they could lend to otherwise very poorly performing WSPs who are non-profit making, about to collapse, but they're able to create innovative structures with inbuilt guarantees and blah, blah, blah. And now some of those WSPs, like the M1, is profitable and it's moving on from project to project. But that was a bank, and out of the three banks, KREP is one that has killed the most and used that innovative structure. KCB has hardly touched on that, and that's a choice when you look at it. It's a really too big a bank, so if you see that KREP that's able to react faster, and these new offerings in the market is able to change. So I'm seeing a lot of change is going to come from within, as opposed from the outside world will support you, but I think a lot of change also has to come from a mindset perspective to the innovation. It cannot be business as usual for the banks.
I agree with you, but one fundamental point that is almost a contradiction in your statement. The innovation is one bit, but there's a partner there that's not a bank. And that's why we're talking to the likes of
the partners will always be there. But I think it's you to approach us as partners with whatever ideas you may have, and then we can work together and see what we can come up with. So the partners are there and they're willing to persist. But the banks are slow to come up with innovative products that will, grow that space for you. Yes. The partners will try and come up with their ideas, but I think a lot of the initiatives also has to come from themselves, which I don't see much of.
Yeah, but I guess the partners can also be assumed, though it's a reality. I mean, from where I sit, the reason why we are here is we want to find the partners.
No, we're addressing those gaps. So I'm trying to reassure you the partners are there. The willingness to partner is there. We might not be the ones who come up with initial thoughts around how to partner. A lot of the thinking has to come from yourselves because you're feeling where it's fighting. And then just to reassure you, I think from the P perspective, from the development A perspective, the partners are there and willing to partner with you. So probably you need to be more aggressive in terms of the rapid way in which you deploy some of these innovative structures, and then we can have these not just discussions but solutions that come up with, like probably today what we should be discussing probably a case study of a business that you would love to just but you can't because of certain hurdles, and we can come up with solutions around it, how we each can plug in our own from an ethical perspective side of it, from an EFI. So to really come up with solutions, because you can have a lot of discussions, but at the end of the day, developing solutions that can be deployed into the market.
Right.
Like, for instance, would the bank be interested in invest in a fund, an impact investment fund, as opposed to lending directly to SMEs, patient capital?
Look, last year we had 400 million rand that we put into an innovation fund. I do not see any reason why, if we understood what that is, I do not see any reason why we, for example, can go back to group and say this is the opportunity we see, we want to support the group as we want to do such. So,
But I think even if we do that, there will certainly be restrictions even for an impact fund to really go down the bottom of the pyramid, right? Even today, when we have impact funds across the globe, they stop after a particular level. They still can't go below in that entire value chain. So, I think banks probably partnering with, entities like USA, KFW, or many others like World Bank and others, probably can find a solution to lend money to those smaller organizations at a much cheaper cost. And over a period of time, those entities or those farmers or those smaller organizations will come up at a scale where even it will become all the more attractive for even the impact investors to invest money in. Because if I see from an impact investor's point of view, I don't see a reason why I should invest in, say, the small farmers who are supplying to the dairy, right? But I want to invest in the dairy, and I'll give the dairy the equity which needs, and probably take some lending from the banks. But how do I really go to those farmers? And the bank can probably, through various innovative structures, through USAID or KFW and others, probably can start lending down at a lower cost. And we've seen that happening. And we've also had the same example in clean energy in India, where KFW has given a line of financing to one of the banks to lend to energy companies at a cheaper cost, because the cost of raising capital for energy projects was really high, and the projects were not viable. So, and banks were really helpless. So KFW decided to give them a line of financing at a much cheaper cost, and that from the bank's balance sheet went on to those smaller energy companies, and the bank was basically managing those companies on behalf of KFW. So that's something that is possible. So,
going back to the dairy processing company, right? It's not the banks that are going to know the milk producers as much as the dairy processing entity will know.
yes.
So maybe the way to reach down to the bottom of the pyramid is through that processor who has a history already of dealing with farmer A, farmer B. Okay, they know who is creditworthy and who's not. The bank is not going to know that.
That's right.
Commercial banks are not in business to do that.
Right.
Okay, but maybe the way to go is through supplier credit on the part of the dairy processor to its farmers.
Yeah.
And if you can build in a mechanism whereby you're lending to the dairy processor at a somewhat reasonable interest rate, well then maybe they can pass the savings on to the farmers. Maybe that might be the way. Or a combination of lending and having the dairy farmers themselves, maybe through an incentive savings scheme. So a hybrid, half saving, half lending, which will reduce the ultimate interest rate. Because commercial banks are not in business, they don't have the structures and the organization and the operations to reach down to the individual farmers. So the best way to do that, well, microfinance institutions do, but they're very expensive by definition, is to go through that process and have supplier credit. I don't know what Stanbic thinks of that.
Which, like in the case like that, we have a very strong corporate government in Kenya. And I don't know how well the banks work with the corporates, especially in the agribusiness side, where they collect a lot of data, they know their farmers very well. So if it's a matter of data, the bank can work with the corporates to collect data and provide lending to those farmers.
To the cooperative itself?
Not necessarily even to the cooperative. I mean, whatever collaborative effort they can do directly or via, whatever methodology. But again, it's that issue of collaborating, understanding which partners on the ground you can work with. Because if you allude to the fact that the processor should be now on lending to the farmers, it's not going to work. The processor is supposed to focus on processing.
It's supplier credit.
the processor gives to the farmer so that the farmer can use the money to do what they have to do.
But that's not their core business. So the core business of lending is to the lenders, who are the banks. So in that model, we can work with the cooperatives who already collect a lot of data that they can provide them to either on lend directly or even through the cooperatives. So I'm not sure how closely
The thing
work
is,
with cooperatives.
I don't think there would be any challenges with us working with the cooperatives. But for us to work with the cooperatives, we need the liquidity. So that's a second stage that we can do. So if you go into the agency banking model, that's really what we're trying to achieve. They have feet on the ground in places where we may not, and they can actually touch the bottom of the pyramid. So that is stuff that we're working on, and I'm sure other banks are. But to activate that, we still need the liquidity. Either that or some form of guarantees that will allow us to do that.
All eyes on you.
I'm going to have to sit down.
So one example that was given in one of the sessions that I attended this morning is Root Capital. I don't know if you guys know Root
Yes.
Capital, how they work. So they have a 3-way contract with the farmer, the buyer, and themselves. So they lend to the farmers, and the farmer then sells to the buyer, but the buyer pays the money directly to the lender. And whatever is left over after they've taken off the initial capital and the interest rate accrued is then transferred to the farmer. So that is some kind of guarantee. So you don't have to worry about the farmer is not going to pay us if they have a bad harvest or whatever, they're not going to pay us or whatever, because you're dealing, the one who gives you your money back is the buyer before they give it to the farmer, who can sometimes spend it on all that kind of stuff. So there's some and I think that's the model that you were mentioning as well before, that is working in India as well. So that's already being replicated on the continent.
We have done that in many markets as well. So we've done it for tobacco, we've done it for other commodities, maize, soya, wheat, so barley. So we've actually done that. I mean, not too long ago we went into a protracted negotiation process with East African Works, for example. They wanted us to sort of outgrow our finance, which is exactly what you're saying. Usually that, the off-taker or the counterparty is quite strong. They're strong enough to provide a guarantee to allow you to then on-lend to these guys. So that's a structure that works. We probably wouldn't have challenges at a micro level to transfer it. We would just reduce whatever amount you're talking about. It still leaves the portion that I'm talking about. So outside that, how else can we then ensure that we remain relevant to the environment we operate in and touch more lives?
So Priscilla, is UNDP running any of those programs here in Kenya? Any such programs where they're tied up with banks or other agencies to on-lend or make lending easier and cheaper?
Or impact investment with other players?
No, we don't implement directly. We're more of a catalyst and converging institution, bringing together the key stakeholders around the table. But one program that we are actually implementing in our unit is actually related to agriculture. We call it the Agriculture Supply Development 6 UNDP country offices, where we train the smallholder farmers to be able to meet industry standards so that the quality, the product that they're providing to the aggregator is of a good enough quality to actually be sold and get enough profit that they can actually be able to give back the money to the lender. But the action plan. One of the activities that we have is related to investors. And one of the things that we found when we did this landscape analysis of challenges and opportunities in Africa was to see that there's some work that is going on. So there are some institutions, there are some financiers, some investors that are lending, but we don't have this information in a centralized place. We don't know any good examples. So exactly what we're asking for now, any good concrete examples of how other institutions, how other investors can lend to SMEs, can lend for impact. So one of the activities that we have here is to try and create a database that actually collects all that information and puts it together in one place. So that if you're an investor and you want to copy a model or replicate a model that is taking place in India and is working really, really well, you have this place where you can find it. Unfortunately, we haven't done that yet. This is what we're trying to do now, to find stakeholders who we can partner with to help us do this work. But one of the main issues that we've seen is for impact-related activities or interventions, there is a big gap in terms of data, in terms of information on what is needed, who is already acting, and where other interested stakeholders can come in. So if there are institutions in here, USA, for instance, that would be interested in partnering with us to fill this gap, that would be great. And then we can come to the investors and the funders afterwards to give you some of these good examples and link you with SMEs, entrepreneurs, enterprises that would then have this kind of impact.
In that case, I guess I would like to thank you all for all the valuable inputs. I think as a next step, probably it might be good for you to just probably brainstorm with Dennis at some point when you're away over the next 2 weeks, and see how you can come up with something that meets your requirements. Also, probably maybe good that if we can try and see if we can get you connected to KFW and the likes of KFW, who are already doing something like this in India, and more, it's easier for them to replicate it here. So probably would like to do that as well with you. And thank you all for spending some time with us, and have a nice evening.
Thank you very much.
Thank you.